Good afternoon, everyone. Today is Sunday, May 24th, 2026, and this is another segment of the Sunday Wrap, Relative Edge. We got Rich here today. We got some relative charts. We're going to talk about a lot this week. A lot of interesting stuff happening in the bond market, stocks, crypto, gold, silver, oil analysis. We got some relative charts. So it's going to be a packed video. Make sure to like, subscribe, comment anything you have questions down there. And yeah, we'd love to have you here. Thank you guys for the support. How you doing, Rich?
Hey, I'm doing great. Thank you for joining in, audience. Good afternoon, good morning, and good night, wherever you are in the world. And looking for another great segment and for our weekend review and projecting what we're going to do for the coming week.
Yes, sir. Yes, sir. So let's hop right into it. So last week we saw something interest rates. Remember, we're trading in this downward parallel channel. Last week we opened up the week above the parallel channel. We pushed up early in the week and then eventually had a bearish engulfing bar to close back into it. But it's funny, if you look at the weekly chart, last week we closed right inside of it. We actually peaked above it, came back down, and then we opened above last week, pushed up, and came back down. So interest rates still within the safe range. If we get above this downward parallel channel, not looking good. So keep that in mind. Let's go to the dollar. A lot of interesting stuff here. Let's pull up this other chart that's a little bit easier to see what's going on. So the daily chart here, we had this downward trend line going back from what November 24th, and then another resistance at January 19th, and then we had some higher highs here. So higher highs over here supporting. We broke out, and we traded shortly above this January 16th high, and then we couldn't hold that. We got back down, and then last week we came back and tested that. So we're like in this kind of megaphone pattern. So this is converging. This is a pennant. We broke out the pennant. We traded up here briefly. We couldn't hold above this 16th high, which is an extremely strong pivot, in my opinion, strong resistance. And we gapped down, tested once, now tested twice. We can't get above it, so I want to see next week if we get above this. That's bearish for the markets. That's bearish, meaning downward pressure, selling pressure, and gold, silver. Oil's been trading in tandem with the dollar and interest rates, so bull flag, but sideways consolidation. And we see this topping tail here that we got on March 9th. Since that topping tail, we haven't made any consistent new highs. We've kind of been trading sideways. And if you look a little bit closer, we were forming higher highs, higher lows here. So we got a low here, higher low, and then higher low, but we broke out of that. So last week, at the end of the week, we broke lower and we closed below that. So I'm still expecting the next support is going to be, in my opinion, at 90. That's where we bounced last time. I eventually believe we're going below 80 into the 70s. And the reason why is because we got this gap up February 27th. That's a long call from here. Honestly, if that hits, I would be proud of myself if that hits.
Yeah, you're talking, we got to have peace.
Yeah. It's gonna need some news to get down there. But I know one thing: the midterms are coming around, and Trump doesn't want higher oil prices. But I don't know. We'll see what happens. It really depends on headlines. But I do, just looking at the charts and forgetting about headlines, this is overbought. And before this move going higher, I did foresee a move higher before we even got a headline about the war. So now I'm doing the opposite. I'm perceiving a drop before the headline pops. So I've noticed sometimes the charts kind of precede some of the moves. So, and then if you look at the weekly chart, MACD, it looks like we're about to flip red. We're in like the last couple, the green bar. So it's always possible this can turn back to green, light green, and push up higher. But really, after this weekly close below 97, that was the support. When we gapped up here, we opened here and we closed below that. So, I mean, this week is going to be very key. I'm seeing that from some news sources that there may be some talks closer to a resolution between the U.S. and Iran, so we'll see what happens there. Um,
Yeah, Iran hasn't confirmed yet though, because there's 2 points in the news. The draft of this peace deal, but and that's news coming from the U.S. However, Iran hasn't confirmed that
mm,
yet.
yeah,
Yeah, but I agree with you in terms of going down because eventually, I mean, we're closer to peace than conflict, and it's just a matter of time. You
hmm
know, how long do it go sideways? You know, and reach before the breakout to the upside.
yeah, yeah, exactly. So I mean,
Hmm.
if you look at just the RSI on oil, anytime you get above what 84, this is like the highest
Hmm.
reading we've seen since what '07. Um,
Hmm.
so and last time in '07 we got steep drop, a steep drop correction. I don't know if we'll get something like that. Honestly, I'd be surprised if we get something like that, but I do expect at least some type of pullback to one of these estimated moving averages and moving averages here. So
Hmm.
um, on my other chart here, I'll show you this real quick. So we were trading in this downward parallel channel here, and we broke out of it. So I that still coincides with the 68 level. So I wouldn't be surprised to see this come back down and test that downward parallel channel. But like I said, that kind of is going to require news. But we still are very overbought in the short term. I think oil is going much higher. I just think it may need to take a breather. But really, what it comes down to is some more lower closes. Right now, we haven't got any confirmation of any move. So still a headline could and an escalation in this war can kind of accelerate things. But I mean, if you look at the oscillators, I mean, we're lower on the daily. We're now below 50. We were trading in this downward bearish divergence and we broke out of it. So I was like, for a second, I was like, oh, maybe it could go back up. But oil is very tricky here because it kind of is determining a lot of markets. And if I drop a straight line at the 50, we broke below the 50, broke above this bearish divergence. So like kind of like a mini breakout, but now we're breaking back below the 50, which we know is bearish. So keep an eye on that. So checking on gold and silver. Gold and silver kind of trading sideways, not really looking the best on the gold chart here. We're at the top of this bearish pennant, this bearish downward channel. So if we go any lower, I'd say if we break this 4,300 level, we're likely to challenge 4,000 for sure. That's just a psychological number, and the potentially the bottom of this uh, parallel channel. I don't think that's gonna happen. I think we'll bounce back up. We need to close above 4,700. If we close above 4,700, this 55 simple moving average on the daily, I would assume we're gonna go higher. And if we do break out and close above that, we can move higher and test all-time highs. That is more my biases, just with me thinking the dollar's gonna go down. I'll show a little bit more reasons why when we start looking at the relative charts, which gives like a little bit better of a picture. Silver chart looks a little scary here because look at this. We had this upward parallel channel we were trading in before, and look at this. When we broke out, we flushed. So we kind of are like breaking out here. It depends where you're drawing this line. If you're drawing this bottom line from the wick, we broke down, and
Hmm.
this looks kind of like a bear flag. If you draw it from the close, then we're still holding support here. So keep that in mind. But
Hmm.
we're in the tight range, and I would call it if we break below this line, the all time like hey like this is going to 55 would be a break below 72. I'd say 71.5. And I think that we're gonna move higher if we get back into this upward parallel channel. Right now, it is kind of hard to tell. When you look at the relative charts, though, it paints a little bit different picture. So I'm still biased towards this going higher. But yeah, that's what I got for this. Um, I guess we can check out the SPY real quick, and then I'll
Yeah.
hand it over to Rich. Um, but yeah, the SPY very overbought. One thing that I do want to keep in mind is that we had this bearish divergence coming from March of 2024. So higher highs, higher highs, higher highs, but on the other side down here, lower high, lower high, lower high, lower high. So we actually broke out of this. So typically when you break out, you want to test it. So I wouldn't be surprised to see the market sell off, maybe find that EMA, which it seems like it's gotten so overextended. So I wouldn't be surprised to see some type of sell off, correction back to the EMA. But I mean, it's really hard to tell right now. We have a really strong move, and with interest rates going lower, I can expect bigger distortions in the market. I mean, look at this right here. Like if you zoom out, like does this look like a linear curve or does this look like an exponential curve? If you were to ask me, I'd say this looks like an exponential curve. So, I mean, this goes. SPY is clearly correlated with money supply. As money supply increases, it seems like
Mm-hmm.
everything, all asset prices increase exponentially. So, if this were to be a true exponential curve, that means that each correction is followed by a faster recovery and a stronger move, and the moves down are more rapid. They last shorter time frames, but they're stronger moves and they're quicker, which is kind of what we've been seeing. So, but either way, this does look overbought. I'm staying away from stocks in general, just because the relative charts are speaking a different language to me. But I think it's kind of hard to tell honestly when it
What,
comes to the SPY.
what is this? A quarter? Each candle. What's the time frame on this
This is a quarterly chart, so each one of these
quarterly chart?
bars
Okay.
is a
All right.
quarter. So I mean, right now we're way extended off of this moving average, but at the same time, this is literally going.
Mm-hmm.
This is an exponential chart, so like this is going vertical basically.
Mm-hmm.
Um, so something to keep in mind, that the moves and distortions can continue to run higher, and the best way to look to know is by looking at interest rates, because if for example, if interest rates can stay within this parallel channel, then I would expect this move in SPY to continue. If interest rates start to creep above and start moving higher above like 4.5, 5, that is going to put pressure on the market. So that would be my key. Definitely want to watch interest rates and make sure that we don't get above this trend line. But yeah.
Mm-hmm. Here illustrated as the SPX. Each candle is a day. So the last candle that we see is Friday. And just zooming in, this is Friday, May 22nd. And I was curious to see that's on May 4th, like a weekend and a day before that, Thursday, May 14th. Looks like we got here is a double top. With Friday, we got a top and tail. Zoom in a little bit so I can see a little bit clearer. Um, However, a couple of things. One, this is what you call on the uptrend that we have a megaphone pattern, which is bearish. Now, although it broke through May 14th, it broke through on Friday. It's pulling back and forming this double top. So there's some weakness. There is some weakness there, but that's on a daily basis, as Gibraltar has shown you before. On a quarterly basis, it's strong and going exponential. So we'll take this day by day, and plus geopolitical things that is happening. Anything can change in a moment. Actually, over the weekend, which I will show how it's affecting the crypto market. So, but we do have if um, if we do start to sell off, we got a couple of gaps. To the bottom side. 70% of the time gaps do actually fill. So that's what you see on the SPX. It's it's a caution sign. It's definitely a caution sign, but the overall trend is up. You stay with the trend until it ends. Right? So, and looking at the RSI, if we zoom in, yeah, there's a bearish divergence from April 16th to May 14th. However, when you start to see this zooming in, that the bearish divergence, which is a warning that there's a pullback. The pullback has been made. Now it's below this midpoint, which is the dotted line.
Mm.
Now it's advancing. So you're talking, does this midpoint indicate with the daily candlestick, which is a reversal candle? You're talking a bearish hammer going on here. is this midpoint of the relative strength index acting as resistance and we're going to pull back? Or is it going to push through? And even on this trend line of the relative strength index, does it push through? In addition to this megaphone pattern, does it continue to rise up, which would be bullish? So yeah, measure your risk at all cost.
Yeah, you
And
probably want to see that bearish divergence get broken, and then like maybe come back and test that line to see if a continuation happens. But a rejection and a sell off would mean like maybe we go test that line and then get rejected by the midpoint.
mhm. Right, exactly. And as we go up, this is a point you got a low and higher lows in terms of market structure going up, higher low, higher low, higher low, higher low. This one pulled back, and the market structure is weakening here. I mean, it pulled back and it did a lower low. However, it advanced up, but didn't advance higher than May 14th and form a higher high. This was actually a lower high here. So has this market structure broken where you got a lower high and a lower low relative to the higher low of May 12th? That's yet to be seen for next week. And also keep in mind we're coming into the end of the month where we're on the 24th today. When is the end of the month? End of the month is going to be the last trading day for this month is going to be Friday the 29th. Many things that happen is such an advancement to also what money managers do many times at the end of a month is to take profit. So possibly you're going to see a dip, but that could just be temporary. So you might just see a sideways flag here
Hmm.
with those days. So let me move to crypto. Let's see what Bitcoin is doing.
Bitcoin looking a little shaky lately.
It sure does. It sure does. So we still have this rising wedge, which we've shown for some time, which is bearish in a bear market. But here's the interesting thing that's happening. What's developed here? Maybe I can just illustrate with some text. We have a left shoulder. We have also, let's make this quick.
Mm.
We have a we have a head right here. If I can get some things in here. We have a head and we have the forming of a right shoulder, so to speak. However, we got some things that are happening here that I'm going to bring to everybody's attention. Let's move this up a little bit here. Well, I want to put it up top. I want to make some things clear in this chart. A couple things happening. This downward move here in this red candle, let me blow it up a little bit more, is significant because as we rose up, we're getting, you got your lower here, and proceeding, you got higher lows to this point here and even this point here. However, we dipped below this higher low in this candle and it pushed back up. Now, why did it push back up? That was actually news. That was news that pushed crypto market up. And if you aren't aware, this is Saturday and crypto trades 24/7. And on news that getting closer to a deal came out and it pushed up. So it was pushing down as weakness and forming this right shoulder here. But good news pushed it back up. But also what's significant is that it's not coming back up to this resistance right here. It moved down on this red candle, and if it wasn't for that good news, it would have continued to move down. So what you got here, if I draw a line here to also of that pivot point, this high low that it broke to, you're talking about what it's done is a liquidity sweep, you know. So it's actually liquidated a number of longs. People are still in the long. That cycle says that in a bear market, we should be going lower for crypto. And if we go lower in the S&P 500, if we do that, we are definitely going to go lower. However, just with the S&P 500, got good news. Um, it's gonna rise. It's gonna rise up. So long as I have to be careful, shorts have to be careful too. Also, I do want to take a quick look at the RSI at the bottom, as you see here. It as is on an upward trend, but like I said before, with the RSI, this midpoint can either act as resistance when it rises up, or if it breaks through, it's probably going to be on good news. And everything I believe right now is predicated on the geopolitical things that's going on. It's very news driven um, right now with certain moves. It's affecting it, but we shall see as we move into next week. Even though we're looking at the technicals, and it's like why always got to ask, well, why did it go there? Why did it move there? And many things right now is the geopolitical tensions in Iran. However, if you're a day trader, you can you can maneuver around that. If you're looking at the news or just not looking at the news, looking at the technicals and making sure that um, one, your risk reward and your leveraging is in par. So you just got to really manage your risk at that point as a day trader. So, and that's what I do. I take little bites here and there. If it's not looking good, I stay out of the market. If it's looking good, at a great either 2 to 1 risk reward or more, I prefer 3 to 1. So minimize my risk and extend my gains. Yeah, and that's what I have.
Good stuff. Good stuff.
Yeah.
All right, let's hop into the relative charts and see what the ratios are showing. Alrighty. Yeah, so very interesting stuff going on here. Check out this MMRI. Um, this is very interesting if you zoom into the daily chart, just because we're getting some interesting stuff on the RSI here. So remember, like we went over here, interest rates in the dollar, as those go up, they put pressure on the markets. Think about it like this: interest rates go up, money is more expensive for people. People are less likely to take out loans for houses, businesses, any expenses if interest rates are higher. And same with the dollar. Dollar is more expensive or stronger versus other currencies. That means people are less likely to buy U.S. goods um, because our dollar is stronger. And when people sell assets, they go into the dollar. And right now, with oil still being primarily bought and sold with U.S. dollars, as oil has been going up, the dollar's going up because of the petrodollar. So as this ratio goes up, basically it's more fear. It's a pressure gauge, more or less for the market. And yeah, that's our quick rundown. You want to see this go down. As this goes up, we're going to see pressure, which is funny because lately we've been seeing the S&P 500 run up despite this moving up. But this is overall a lower high here. So we got a higher high, but a bearish divergence, equal high, but a lower high, so bearish divergence again. Now we got a lower high here. And we're kind of getting something similar to what happened here on the RSI, where we got a first initial touch, which is right where this first arrow is of the bottom range, and we have that second peak above, which is, it looks like this is what it is. So last time we got this double peak above this RSI downward parallel channel, we flushed. So we got that double peak above. I'm expecting a dollar and 10-year yield to flush, and that means oil should flush with it. But we'll have to keep this in mind, because if this continues higher, then this is broken. If this finds support and breaks out, then I have to reconsider that. But as of right now, it looks like we are starting to find some weakness. We were trading in this parallel channel. We broke down, came back in the parallel channel. Now we're coming back down here. So if we break down here, we can see a strong flush similar to like what happened here. So we'll keep that in mind. Dow Gold ratio. This is very interesting because we were trading in a macro downtrend, right? And now we've completely reversed course here in the short term. We broke above, and we actually hit my target of 11.15 that I mentioned in previous videos. So right now this is in dangerous territory, because if we continue higher, I drew a parallel to the top, basically showing the lows here and then paralleling this and throwing it at this high right here. So if this continues to go higher, we can see a move, I guess it would be up to where we've previously found resistance, which was this 12.25 level, the top of this parallel. I don't think that's going to happen, but I mean the RSI is showing higher high here, corresponding with the higher high here. So I'm not seeing any bearish divergences, which is not really a good sign for gold here. A good sign for the Dow. As the Dow gold
Right.
ratio goes up, that means Dow is outperforming gold. So right now,
Right.
commodities are losing. They were winning before. They were in a downtrend, but until this trend reverses, which
Mm-hmm.
it did look like for a while as it did break down, but now it's reversed and it's reacquired both trend lines, both this resistance and this support. So this is only one day. Keep that in mind. That's only
Mm-hmm.
one day, but we want to see if this continues higher or if it rejects and comes back down. But right now, there's no evidence of this coming back down. This right now is looking bullish, but it needs to confirm here. It does need to confirm. So,
Mm-hmm.
which means another lower, a close on testing a red bar, basically a red day, but closing above this 11.15 ratio where we saw strong resistance before, We saw bouncing here before, so there's gonna be some movement here at this level.
Yeah, probably what's happening with the heavily weighted companies coming in with great earnings, especially with technology too. Also, that's
Mm-hmm.
why you see the advancements. Yeah,
Yeah.
see the Dow advancing. Yeah.
So I'm very curious to see what happens here because this has been in a downtrend for a while now. Since
Mm-hmm.
overall, I mean the peak here, and actually let me just zoom out to the weekly overall. So the weekly chart. Let me actually go to the monthly chart. So the monthly chart shows like we bounced in what in 1980s, then again in 2011. So I mean,
Mm-hmm.
when we get close to trend lines, we kind of get attracted to it. I still
Mm-hmm.
think that we will turn over and test this trend line again. So I don't know how much higher we will go. Honestly, the way this is looking right now, if we continue past 11.15, like I said, the next level up would be 12.2, and I think that would
Mm-hmm.
be final resistance. And so we may test that 12.25 level, and then I think we will eventually turn and roll back over and come back down. But the question is if we do it, if we roll over at 11.15 or at 12.25, we'll see. Um, but something to keep in mind. Um, gold silver ratio, very interesting stuff going on here. All right, so just keep in mind on the daily, on the monthly chart, RSI we're below 50, so better to be in gold in the monthly, or sorry, silver in the monthly. When the RSI for a chart is below 50, for a pair chart is below 50, you want to be in the denominator. If it's above 50, you want to be in the numerator. Um, So monthly is favoring silver, weekly is 42. That's favoring silver as well. And the daily is 49.72. So it's still favoring silver on all the monthly, weekly, and daily. When you have a declining gold silver ratio, that means both gold and silver are in a bull market, and silver is outperforming gold. So right now, the weekly, daily, and monthly, even the yearly, are all saying, "Hey, we're still in a bull market, macro bull market." So until this changes, I can only assume that this ratio is going to continue moving lower. So we are at the 50. We're at 49.72. We had a strong break below this downward parallel channel on the RSI for the daily chart, and we broke right back in. But we're now finding resistance at 50. So this is big right here. If we continue higher, then we may have to zoom out. Maybe the short-term trend will favor a pullback in the metals. But if we continue lower, which is what I'm just anticipating, with
Mm-hmm.
interest rates and the dollar coming down, I expect the gold and silver ratio to come down. So I expect basically a bounce in the markets.
Uh-huh.
SPY
So
silver, what was that?
basically favoring silver as it's
Yes,
outperforming.
yes.
Yeah. Mm-hmm.
Because and SPY silver is showing us a completely different chart than the Dow gold. Is showing that basically like yeah, right now SPY is still beating silver. It's above the 50
Mm-hmm.
here, so it's above this trend line, which was extreme resistance before. Extreme resistance before. You saw it was resistance here too. So I want to see what happens this week. Right now we're back in this upward parallel channel. So right now, short term, until this breaks down, right now, SPY is still going to beat silver. Let's check on the weekly chart. We're below the 50. The monthly chart, we're below the 50. So I still believe that this ratio will break down and will come down here. The test 7.61, but in the short term, we could still work its way up to 11.28. That was the previous resistance. If you go back to, yeah, we bounced here before in 2020, August 2020, and again August 16th. So I mean, gold and silver can definitely sell off, basically, and test this level one more time and then roll over, or it can roll over now. We'll see. But this is already what, 1, 2, and this would be the third month that we close red, or I guess green, SPY versus silver. Oil versus silver. Silver versus oil.
As the week is coming up, the last trading day is on the 29th. Watch out for those options expirations.
Yeah,
and
big
peg
time.
to a certain price. You
Yeah.
know, yeah.
So silver versus oil. We checked the RSI. We're above the 50, so it's better to be in silver on the monthly chart. The weekly chart, we are below the 50 at 45, so on the weekly chart, it's better to be in oil. I think this trend is going to change. And on the daily chart, we're smack dab in the middle. We are at 48.63, so we're still favoring oil in the weekly and the daily. So short term, oil has still been outperforming silver. I do see some changes in this trend, and the reason why is because we were in this falling wedge, which is a bullish pattern, meaning that the numerator, silver, is going to outperform oil, and now we're trading sideways into this pennant, in which we got a head and shoulder, inverse head and shoulders. So this would be the left shoulder, this would be the head, this would be the right shoulder, and you can tell this is inverse head and shoulders because the RSI is showing higher lows, so it's showing that strength is building up. Confirmation would be a break above the 50. So right now we're still below the 50, so we can't really confirm anything until this breaks out of this pennant, one, and breaks above this neckline, and the 50, we get above the 50. But I do anticipate that happening. I'm still biased towards this breaking up on the weekly. This silver beat oil by 3.72%. Nothing really crazy. It's just an inside bar. So we're still consolidating in this pattern, and a breakout would be no later than June 8th. So in a couple weeks, we'll find out if this is going to go higher or if it's going to continue to move lower. So I wouldn't expect. I mean, I'm still anticipating this breaking up, but we'll definitely know by June 8th of this year. So, but yeah, I guess one more. I'll just do the GDX versus silver. So, silver miners. So GDX is gold miners. SIL is silver miners. And the reason why I think that we're far away from a secular top in gold and silver is because of, one, all these charts, but two, especially this one. Just because it looks like on this chart is going to break down. So we are below the 50 on the monthly for GDX SIL. So in a gold and silver bull market, silver miners outperform gold miners. And it looks like we are breaking down in this ratio. So that means silver miners are going to be outperforming gold miners. And it looks like we're right at really strong support here. Slash resistance. So we can tell it's resistance because we came here in July 2019. We got rejected. There was a lot of strong movements here, rejected again. We finally came back up, broke through, and what did we come back to test? That level. Then we came back to test it again in December 24, that level. We're testing this again, January 26, earlier this year, this level. And in May, we're now testing this again. So every time we test it, it's getting weaker. And we're showing that on the monthly chart, hey, we're below the 50. That means we're favoring silver miners. That means we're favoring the gold and silver market continuing. On the weekly, we also are still below the 50. So we're favoring the market continuing up. And if you look on the daily, we start out below the 50. So until it's going to start with the daily. If this goes above the 50, then maybe say press pause. But I anticipate that we will break lower at some point this year. Probably soon. It's looking like the tests of this trend line are accelerating. So if you look at the amount of time between testing, let's just do a quick
Mhm.
info line here. So we
Yeah.
tested that.
He's hitting that support. It's going to get weaker.
Yeah, so 25 months was the first test. Then after that, let's see how long it took for the second test. 13 months, which is about half, right? And
Mm-hmm.
then since then, what's half of 13 months? 7 months. But we're getting another test
Yeah.
within 4 months. So we're testing it more frequently, which shows that
Mm-hmm.
we're likely to break. So
Mm-hmm.
maybe the next test will be in 2 months, or maybe this will break. But I do believe that this will eventually break. And what happens when we break below support? Look what happened last time we broke below support. You get 3 consecutive, 1, 2, 3, 4 consecutive months of a strong move down. Look at this.
Mm-hmm.
1, 2, 3, 4, 5. So I'm expecting some type of move like that where we get like 3 or 4 months of like extreme outperformance in this market, which is what I'm anticipating at some point this year. So I'm holding longer dated calls on miners, just anticipating at some point this year of us getting this flush. And
Nice.
yeah,
Yeah. Especially if there's peace talks and sign that peace deal.
yeah,
It's
yeah,
going to open up.
that's definitely
Yeah.
going to be a big catalyst. So waiting for something like that. Wars just got signed in this week, so we got a new Federal Reserve chairman. We got midterms coming around the corner. Yeah, so a lot of interesting stuff going on. Definitely gonna keep an eye on this chart right here, the interest rates and the dollar, to see if we get any changes in the macro. But yeah, right now just waiting for these supports and resistances to get broken down, ratios to flip. But yeah, that's all I got for the relative edge. I'm happy. Thank you guys for joining us. This is a longer video, but I appreciate you guys being here. And yeah, any closing remarks, Rich?
Yeah. As always, stay with the trend until it ends and manage your risk at all costs.
Yes, man. Yes,
That's
sir.
it.
Yes, sir. You guys have a great week. Thank you, and please like, share, and subscribe, and have a good one. Talk to you later.
All right.